Hey everybody, thanks for stopping by. I hope you're all having a great day. Today I just want to do a quick video on Uber stock. Is Uber a buy, a sell, or a hold? On the screen right now I have a current chart of Uber Technologies. Now Uber's traded as high as 46 and as low as 14 and is currently right around $27. If you're familiar with technical analysis, then you can see it is possibly in a rising wedge formation, which usually results in a break to the downside in the near term, and that's exactly what I'm expecting. So just to get it out of the way, spoiler alert, in my opinion, right now Uber is a buy and I've already started a small position, and if it breaks down from this rising wedge, I'm going to add more. Now Uber has a current market cap of around 44 billion. And I can easily see that going to over 100 billion in the next few years with how fast the business is growing, for around a 3x on my money. Right now, Uber is exhibiting a very common chart pattern for IPOs in recent years. IPOs usually come out very overhyped and at a very high valuation and then begin to sell off. I find that it's best to wait around 12 months or so for the hype to die down before I start buying one of these new companies. Here are a few examples of what I'm talking about. My first example is Facebook. Now back in 2012 is when it started trading publicly and it came out way overvalued and immediately started to sell off. But as you can see, if you waited for the hype to fade, a few months later it bottomed out and began to move up. My next example is Shopify. Back in 2015, Shopify did basically the same thing. It took roughly 9 months for the stock to finally bottom out after its IPO, and then investors realized the growth potential ahead of it and started to bid it up. Now my last example is Etsy. Etsy took roughly the same amount of time to bottom out after its IPO, and then it started to move higher. Now what all three of these have in common is they were in high growth mode in the years that followed their IPO, just like Uber. In case you're not familiar with Uber, here's a quick overview. Uber is a multinational ride-hailing company offering services that include peer-to-peer, ride service hailing, food delivery, and a micro-mobility system with electric bikes and scooters. They're based out of San Francisco, California, and operate in over 785 metropolitan areas worldwide. The Uber name has become synonymous with ride-sharing. Using the latest technology, they created an easy-to-use app with a robust platform and user base, making it fast, easy, and more affordable to get a ride when you need one. This service is quickly becoming the most popular form of transportation around the world. Now, the ride-hailing part of their business is what they are most known for. It's the biggest part of their business and the most profitable so far. As of last year, they are estimated to have over 110 million users worldwide. In the United States, they have approximately a 67% market share in ride-sharing and a 24% market share in food delivery. The rides part of the business was already profitable last year, but the other facets of the business had yet to get there, but the growth is still very strong. Last year, Rides adjusted EBITDA delivered $742 million in profit with 24.3% margin as a percentage of Rides revenue, while Uber Eats adjusted EBITDA came in at a negative $461 million. Uber Freight came in at negative $55 million adjusted EBITDA. Now, the amount of active platform customers grew at 22% year over year last year, and the amount of trips that were taken grew at 28% year over year. But the number that really gets me excited is the adjusted net revenue accelerated. And at the end of the day, that's how much money goes into their pocket. So Uber is running their business more efficiently and more profitably. Well, that's the good news. The bad news is, as a whole, Uber is still a money loser. And with the economy being shut down, that's not helping at all. But the way they've been growing, I'm betting that should change in the near future. With the recent economic slowdown, many companies, including Uber, will experience a major temporary slowdown. But ride-hailing is here to stay. So once everything starts back up, people start to need rides again. And with $10 billion in cash on the books and another $2 billion available in credit, Uber has the ability to outlast this shutdown for a long time. Now let's look at the Eats side of the business. Even though Uber Eats is one of the newest food delivery services, they are the one that's growing the fastest, which is mostly attributable to brand name recognitions, which can't be understated enough. Now the trend of people allocating more of their income eating out continues to grow year in and year out. Possible exception of this year, of course. But in 1955, less than 25 cents for every dollar went to the restaurant industry. But it's been growing at 5% a year, So now restaurant sales account for more than half of every dollar. Now, the restaurant industry had sales of over $850 billion last year, up 3.5% from the previous year. So this is another fast-growing business Uber has positioned itself in to be a major player in the near future. Now, with that being said, this part of the business is still a big money loser. That's because there's a ton of competition, making very small margins with everyone trying to undercut the others with lower prices. Now, because of the economic slowdown, this could put a lot of strain on the delivery services. Uber has tons of cash on hand to weather this economic storm, and some of their competition doesn't. I think the food delivery business will consolidate as a result of this, and Uber is in a great position to buy some of the other players out. Okay, let's look at the Uber Freight side of the business. Now, Uber Freight is basically the Uber for truck drivers. Uber Freight is a platform they created to link up truck drivers and businesses to each other much easier and much faster. Uber Freight has only been around for about 3 years, and it's starting to already have a deflationary impact on shipping costs. And as more and more truckers and companies come on board, that should only accelerate the cost curve. Now, a lot of the trucking industry is still in the pre-digital era, meaning they still use fax machines and phone calls. So Uber's mobile platform will give them access to big data and save them time and money. Now, even though the cost to produce goods has gone down in most cases because of the advances in manufacturing, the end cost has continued to rise. One of the main reasons is the cost of logistics because of the shortage of truck drivers. This is where Uber Freight comes in. Uber believes a system that is used to route these truckers is incredibly inefficient. It's estimated that 20% of the miles driven is when the truck is empty. Now, by using the Uber Freight app, truckers can quickly search the map to see which loads are available and which present the best opportunities for them. Truck drivers have restrictions on the amount of hours they can drive, and by making their trip more efficient, they can maximize those hours. Now, once this system is more widely used, the cost of goods should come down substantially. And the products we consume the most, like food and beverages, has the highest transportation costs because of how frequently we purchase them. It's estimated that 30% of a bottled water comes from its transportation costs. User growth has been growing by the hundreds on a monthly basis, and there are already tens of thousands of trucking companies on the platform. As of the previously reported quarter, Uber Freight had a year-over-year growth rate of 81%, and it's just getting started on this side of the business. Now, Uber is going to make the truck drivers' lives a heck of a lot better, because one of the biggest complaints most truck drivers have is they spend too much time on the road. Now, by making their routes more efficient, they'll have more time to spend with their families and less time on the road. Another reason I like Uber in the future is because of their CEO, Dara Khosrowshahi. Now, if you're not familiar with Dara, I'll give you a quick overview. Dara is an Iranian American who started his career as an analyst for the investment bank Allen & Company in 1991. 7 years later, in 1998, he left Allen & Company to work for one of his former clients, Barry Diller, at USA Networks. There, he was a senior vice president of strategic planning, and then eventually became the president, and later the CFO of IAC, another company controlled by Diller. In 2001, IAC purchased Expedia, and by 2005, Dara was the CEO. Now, during his tenure as CEO with Expedia, the gross value of its hotel bookings more than quadrupled, and its pre-tax profits more than doubled. Under Khosrowshahi, Expedia expanded to more than 60 countries, and he oversaw the acquisitions of Travelocity, Orbitz, and HomeAway. And in August of 2017, Dara became the CEO of Uber, taking over for the founder, Travis Kalanick. Now, one thing I really like about Khosrowshahi is his strategy to purchase partial ownership stakes in some of his competitors rather than get into a money-losing price war with them. They did this with China's Didi back in 2016 when they took an 18% stake. They did the same the following year with Grab from Southeast Asia, which they took a 30% stake. And Uber's third tactical retreat was in Russia, where they formed a joint venture with local rival Yandex, which covers ride-hailing and food delivery for more than 127 cities in Russia. This strategy looks to be paying off quite well because as of last year, these holdings were estimated to be worth approximately $12.5 billion, with $3 billion in gains so far. With Uber's strong cash position and their ability to raise cash if needed, I expect more acquisitions will further come and strengthen their business in the future. So in closing, I think Uber has a lot of growth ahead of it, and it should continue to grow at a double-digit clip for quite a while. Now, the disclaimer is, in recessions, companies that lose money tend to get hit the hardest because of the uncertainty of how long it will last. If the market makes a new low, holding Uber stock won't be for the faint of heart. But if you have a long-term time horizon, it should create some great buying opportunities, because Uber should continue to be the #1 player in this growing market. I just wanted to end the video by saying this is not investment advice. This is only my opinion for your fun and entertainment. If you enjoyed the video, please hit the like button and subscribe so you don't miss any future investment ideas. Thank you so much for watching, and take care.